Good afternoon, traders. In this video, we're going to talk about the market sell-off today, my swing trade, which I got stopped out of today, and an account update. So first of all, as far as the account is concerned, you can see all of a sudden I have a buying power of almost $1,200. I have incoming funds of $517.23. That is all from my swing trading account that I had with Chase. If you watched my previous swing trading videos, I talk about that and tell you that Chase is pretty much garbage for trading. And I just did that out of pure convenience and to keep things separate from my day trading. But it's so limiting that I'm just going to use Webull for everything, because Webull's just much better for day trading, swing trading, investing, basically everything that you want to do in the stock market. So that's where this money is coming from, and I'm going to probably split this account 50-50 into swing trading and day trading. Right now, I really don't need that much money to day trade with because I'm testing out a new strategy. You probably know, a market open trading strategy that should prove to have a high probability of keeping you green in the long run and keeping you above a break-even win rate. So the markets today, pretty interesting stuff. Today's May 19th, 2021. Huge sell-offs. There's a bit of a recovery for the day on all the indices, but they're still recovering from a big gap down. So let's take a look at the SPY. So that follows the S&P 500, and I made some marks on the chart a few days ago because things gapped down big time on May 11th. Let me just get rid of this because it might be a little bit confusing for you. So you could see the gap. There's a huge gap here. So I was thinking that at some point, even though this sold off, that we're going to go back and fill that gap, and that did happen on May 14th. And then I was thinking the next day would be a big sell-off, and that didn't really happen. It kind of stayed in that area and then started to sell off on the 18th. And then today is the huge gap down, and today's the day that I got stopped out of my swing trade on SPLG. So who knows what it is. There's still about 4 hours of trading left, so who knows what's going to happen for the rest of the day. And obviously there's a gap to fill here, but there's also a gap to fill back down here, so we could be headed down further to this $400 range before we go back up and fill that other gap. So anyway, that's a little bit of a market analysis for you. And then on my swing trade with SPLG, which follows the S&P 500 just like the SPY does, this is what happened with my trade. I had my stop loss at let's see, it's kind of covered up here. What was the 47.81? I think I got stopped out at 40, or I got filled at 47.79. So altogether, I think it was $1.85 per share win. This was a very small trade. I was only trading with 5 shares because this was my first time really swing trading. I started back in February, and I've been trying to catch a long-term, well, not long-term, but I guess a short-term trend after a pullback to the 50 MA. And I did it a couple of times over here and got stopped out for some small wins and small losses, basically break even after all that, and then finally caught the longer term trend over here. As you can see, SPLG and the S&P 500, of course, does that quite a bit. It kind of trends above the 50 MA, but we're so extended at this point that it was definitely tricky and maybe a lower probability of catching one of these longer trends. But again, I knew all that going in, and I wanted to get my feet wet with swing trading. That's why I did it with small position size and just wanted to get the feel for things. So far it's been successful, and grown that account by 3.5% since February. So I'm happy with that. And then I have the money in this account now to trigger for my next entry. Since we are very unstable right now, the markets are very unstable, and it's looking like we're heading for a big sell-off, I'm probably going to just keep trading SPLG or split it up between SPLG and SPXL, because SPXL is nice because it's 3 times leveraged, but that goes against you during a sell-off as well. So if it was obvious that the market was, say, rebounding from a major sell-off, then I would probably strictly use SPXL to swing trade and take advantage of that 3 times leverage. But right now, with the market being so choppy and the risk of being in a longer term pullback, SPXL sell is a pretty risky venture. So I'm probably going to at least split it up with SPLG and SPXL. That way I'm kind of protected somewhat from any choppiness or major pullback. So anyway, that is it for the swing trade, the account, and the market sell-off. Let me know if this video was helpful to you. If it was, hit the like button. If you're not subscribed already, please do so. As always go into every trade with a plan. You can see my plan right here on this trade, which started back here on March 25th. And I pretty much followed it. Well, no, I did follow it 100%, and the trade worked out. That's not the only reason it worked out, but you know, I didn't change my plan. I stuck to it, and things went well. So that's all I'm trying to say there. As always, have a plan going into every trade. Honor your stop losses. Take your stop losses no matter what, and honor your profit targets. And in the long run, you should be green. Take care. I just got distracted there with a message from Weeble. So, all right.